Hi friends, welcome back for Bitcoin Technical Analysis. I'm your pal Rocky Outcrop. Up behind me at the minute we've got the 24-hour chart, that's the Bitstamp chart, and you can see the prices currently are $7,595 per Bitcoinery. Now the thing about this is kind of interesting. I'm looking right now towards this area at time of filming of 7,600 or so as being a potential little pivoty area in the market. Not pivot, just a profit taking area where we have this magnolia coloured line, and I'm sort of pointing at the minute. I can always use the brush tool, can I, to sort of to where we have this here line come, so a bit of a mess. So, let's explore that in just a second. But before we dive into exploring that, I just wanted to say this thing here from the end of the previous episode, which I think I mentioned in the previous episode, and not everybody watches all the episodes, so of course, you could have easily missed this. Just a little concept to bear in mind. Now, of course, experts in the world, you'll all be aware of this or whatever, but everybody kind of forgets, as well from time to time, worth bringing back up again, that across time, going from left to right, when you draw in a diagonal line on the linear chart, then that it doesn't take an awful lot for something that looks like this, which looks quite a lot like a channel, to actually turn into a wedge if you were to hit the logarithmic button on the chart. Now, of course, there's dynamics at play here in the fact that I actually drew this in using a couple of lines myself drawn in manually. Now they're not quite right, as you can see there, and that's just sort of drawn in for symbolic basis. And if you hit the log button, then your parallel channel doesn't change. But just in terms of when you're kind of looking at the charts, the point that I'm really making is that if you're just looking at the charts and you're kind of just thinking to yourself, hey, this looks like a channel or whatever, you could easily kind of overlook the dynamic there, where if you use the channel tool to draw that in, that sort of a thing, and you think definitely there's a channel, you hit the log button, you think, oh, it's just because I've hit the log button my channel's in a slightly different position. Whereas if you'd drawn that in with the old chopsticks instead, then you'd see would maybe be a little bit more apparent to you in terms of how you're drawing that in. Anyway, that's kind of interesting in a sense that if this was a channel which was also kind of like actually operating as a wedge in a sense, then the rising wedge would be a bearish thing, which could easily be overlooked. Anyway, let's stick it on linear for just now and go back to, again, looking at this line here, this magnolia line. What is it? That's $7,604, and that's the 50% retrace area on this Valentine's Day to the Friday the 13th body-to-body Fibonacci retracement that we've drawn in. So that's kind of an important area to be looking to. And should we manage to make it above there, then perhaps, what we could be looking towards as our next target would be, where there's a few areas of extra confluence coming in here. For instance, you've got the 200 simple, this is this white dotted line coming in right along here, so in this area, and we also have this green line here, which is this green line here, which is we'll look at in a second, and you have this green line above that one there, we'll look at in a second. So the one that we can see just now, that's the 618 on the Valentine's Day Friday the 13th wick to wick Fibonacci retracement that we have drawn in. So we kind of know that that's an area to look out for. But there's this other bigger sort of picture element that comes in just there, and what is it? It's the 382 on the Fibonacci drawn in from body to body on June highs up here down to the lows down, just went a wee bit low there, down there on the Friday the 13th. So that's 382 comes in right around there at that 8,000 level, and that's something to be aware of. Now some people will be looking towards particular things, even just as simply maybe the top of this channel or the 618 on the body to body Fibonacci retracement, for instance, or measured moves that you get off the back of various different things that you might be looking at, whatever, all sorts of things. For instance, this I said whatever there and then I regretted saying whatever, so I felt like I needed to to come in and whateveritize it. You know, you could have a sort of measured move off the back of something like that and look up towards the mid 8,000s. Okay, there's always sort of patterns within patterns. Here's another one that we discussed at the end of yesterday's video as well, with their sort of descending, broadening wedge between these 2 points here. You know, there's always that sort of a thing, and if you wanted to kind of break out from that, it could take you up towards that target that we spent a minute or two talking about, you know, just beforehand. But you could be looking towards like 8,500 or whatever, and where would that put you in the other parts of the charting world? And you could look over here towards the CME chart. Now this top box here, this is a gap. This represents a gap, and this bottom box here is actually showing where the opens and closes where the CME is on Friday yesterday. So actually I'm going to change that instead of being a box, because that could be confusing to people. I'll just change that to a couple of lines, and I'll get rid of that rectangle actually. So essentially, right, we've got this box up here which shows where the gap was previously on the CME chart, which is, you know, still there, 8,295 lows up to 9,000 highs, and then you've got this showing where the price action ended on Friday. So if the prices open up here on Sunday night, sort of Monday, depending where you are in the world, you below 7,455 equivalent, so 7,350 or something like that on spot prices, then you're going to have a gap, you know, potentially towards above the price action at that point, putting upward pressure on it perhaps. And if you had the prices opening up above 7,750, then you'd have a gap towards the downside. Actually, that's maybe even a little bit high there, 7,700 really. So, you know, 7,600 or so on spot prices, and you could have a gap to the downside, you know, which ties back into what we've been looking at over here in terms of this particular line now in around 7,600 area as a little sort of inflection point. And the chat about the 8,500, well, where does that come in at on the CME chart? We have the 200 simple in and around there, and if we look to the left, we have this 50% retrace area on this old Fibonacci retracement from the lows in December to the highs in Valentine's Day over there to look at in terms of the 50% retrace area, just coming in at where that, around about where that measured move would have taken you on the CME chart. Just looking at this to now, I was kind of thinking, do I want to have this? Do I want to have something like that as a thinking point on here instead, just for now as well? Because looking at it and thinking, this is might as well have the all-time lows and highs and whatever, and see how this comes in. But yeah, because just thinking here that the 50%, like the likelihood was that the 50% retrace level is as well at that 8,400 area. So that's what. So, you know, you could be looking towards that, and that would be half the gap filled. So, you know, we'd have to kind of like look at the dynamics about how all the prices are operating around this area if we were to get up and do all that sort of stuff. You know, that leave that for another time. That's a little bit sort of FOMO-tastic on that front, because, you know, that's quite a ways away, but, you know, you've got those elements at play there. Now, again, of course, so let's just imagine to the contrary, you know, we don't get above the 7,600, then kind of looking back again towards that 7,450 where we have this horizontal line at, and saying, you know, should this become a higher high compared to here, and you know, just getting towards the middle part, so to speak. I put that in wrong. The median line on this channel, so to speak, then, you know, could we maybe potentially see a retrace from there and come back down and retest the lower ends of this channel, so to speak, and put in a higher low. And you could see that, you know, you've got the 21 EMA here, just as I'm pointing now, and, you know, if that's if over the next wee while, maybe we can see the prices go and revisit that, you know, or that could happen, and that could be part of this overall process of setting in higher lows. So, you know, we don't need to be too sort of bullish and carried away overall. Should we see prices actually opening and closing on decent level time frames, you know, 4 hours at least, but more than that, 12 and 24 or whatever, below that 7,450, and of course where would 7,300 or so put us? And again, just in terms of the CMEs, well, the internet seems to have decided to stop working just there. So in terms of CMEs, what we were talking about was that the would have been just below would have been a tiny little gap would have emerged, I suppose, below above the current price action there, putting a little bit of price pressure up towards perhaps filling that, and then, you know, coming back down again thereafter, kind of and we can talk about that for like little sort of scalp moves and things like that in the meantime. But why internet stop being rubbish? Well, that was immensely frustrating. Okay, so we've got the internet back again, and that threw me right off my stride. I don't know. I suppose what I was kind of saying at the time was this here would be my sort of little line that I'm looking at the minute, 7,600, and moves going either direction are all right from there. I'm not a financial advisor, none of it's financial advice, but I think that would be an easy enough area to manage my risk at for longs or shorts, really, depending on how the price operates in and around that dynamic there. And it could, you could be looking to short that down to this sort of area where we have the other 50% retracement at 7,200, or you could potentially be looking to long it up towards 8,000. And there's various reasons for and against both of those. The diminishing volume, back to the price action, just as to wrap up what's on the screen. The diminishing volume is the story continues, as you can see here. This flat earth to deceive. As we look towards the bigger picture, you can see it's not really increased that much. So that breakout chat from the triangle is not super fantastic looking, and but there was a decent volume candle here during that move, but that's nothing that particularly unusual, whatever. So that's kind of slightly bearish actually in a way. And if you see here, we've got no bearish divergence on the RSI. That's good to see, apart from on perhaps if we look right back the way, we could maybe get hidden bearish divergence or something like that, but in terms of this upward movement from down here, it's not bearishly divergent really. There was a bit of bearish divergence here between the previous two highs, but that wasn't actually a high, that was a lower high, and that's convergent, so it's not really. And actually the two highs are the ones that we're looking at, so they're not. So what operates contrary to that is actually the stochastics. It's looking a little bit like it's bearishly divergent currently. What's working for that again is the DMI. That's looking all right. The strength of trend still remains really low though on this daily time frame. It's just not there. But however, things continue to go towards the upside, so that's good. And the MACD, well, it's divergent as well, so it's bearish divergent. So you can kind of draw it down the middle there and choose whatever way you want to look at that. And let's go down to the 4-hour time frame and see if it's the same sort of a story as well between these highs here and here. That's all bullishly, it's bullishly convergent, you could say, between sort of those highs. So that's okay just for now. Then just see this consolidation period that we've got at the minute doesn't really constitute for highs and lows on the 4-hour time frame. So that's where we've been for the last chunk of time. So that's all we can really look at and say, hey, look, we're above the 21 over here, above our horizontal support. We're looking at consolidating just below this little bit of potential pivot inflection point there. There's a positive and a negative story to be spun out of either of those, depending on how the price action responds. Just around about these areas within $100 or so from where we are just now. Looking towards the 12-hour, I appreciate that that's all squished up at the top, by the way, but I'm just wanting to have the real estate for looking at divergence and stuff at the minute, and just can we open this up again and reconfirm like we did a second ago to see that I wasn't looking between what was actually a lower high and the price action. But we can squish it away again and say, look, convergent, divergent, convergent. And what is this? This is like class B divergence, or is it actually just straight up to, no, it's just regular divergence currently between these highs. So there's a little bit of sort of downward pressure in a sense from the divergence, or warning signs anyway, in terms of like getting too carried away but looking towards that 8,000 level over the weekend, but then again it's not particularly hard to sort of push it there. And likewise, an easier sort of target to sort of look to sort of consider about how you would manage your risk again is in that 7,450 area, and I think that'll have to do for that for now. Right now, if you still stay tuned though for just this second, then I can tell you about how you can get a $10 bonus, which is quite cool. And that I'll be launching a Discord. So I've made it over 500 subscribers, and that's cool. YouTube sent me an email. I might just screen grab the background and stick it behind me as a chat here actually, and saying congratulations. And that's all thanks to you. That's wonderful. So I negotiated with Bybit to get a sort of special bonus for Rocky Outcrop and decided that we'll go with that around this 500 subscriber number. So that's all great news. So there's the first 5 people who use the referral link that I've got from Bybit to create an account will get a completely free $10 bonus in there, which is absolutely fantastic. And then for everybody over the next couple of weeks who actually uses that, beyond the first 5 people, everybody who uses it, including the first 5, will get an additional $25 or $50 bonus when you deposit into there. And if you go and look at bybit.com, you can see that they've got the Bybit If you look at Bybit, then you can see they've also got this thing here with their start trading risk free. You can claim coupons, you can get all this sort of stuff. So you can use it with the rewards hub. It's great for, like, you know, little things. You can get a $5 off them for having done a little thing on there when you try out their take profit stop limit order bit, you know, $5 for free. So that's kind of cool. So I feel comfortable enough shilling their awards center, their rewards, promotions, all that stuff for people that they do all the time anyway, given that they've given us a unique bonus for just us. So they won't find that additional deposit bonus anywhere else. So over here you get a deposit bonus, for instance, the $5 for 5 millibitcoins, $50 for 500 millibitcoins, or half a Bitcoin. You know, for instance, whereas as you use my link on there, you deposit 0.2 Bitcoin, then you get an additional 25 or $50 for doing that, or 0.1 you get 25. So if you did 0.1, I guess, then what you'd get is the $5 from here and the 25 bonus that we've got, and that would be $33. And then if you're one of the first 5, you get $10, and then of course put an order in here, you get $5, tweet them and you get $5, and that's all good cracks. And it's really good for people who are just getting started on there with trading and stuff like that. There's a few things, so I'll make a video later on talking about that just briefly. So thanks so much for tuning in, and I'll catch you next time.